Perry G. Mehrling, Fischer Black, and the Revolutionary Idea of Finance. Dive into the fascinating world of Fischer Black, a groundbreaking figure in financial economics, through Perry G. Mehrling's book, Fischer Black and the Revolutionary Idea of Finance. Learn about Black's development of the capital asset pricing model, CAPM, which revolutionized the way people looked at financial markets and risks associated with investments. Explore how Black applied CAPM principles not only to his personal life, but also to his broader understanding of economics. Discover how his ideas challenged traditional macroeconomic theories and government intervention, while paving the way for invaluable financial tools, such as the Black-Scholes option pricing model.
Fischer Black and the Art of Risk Management. Fischer Black, an unconventional economist and co-founder of financial economics, was the pioneer of the capital asset pricing model, CAPM, a groundbreaking theory that changed the way people view the stock market. He was a risk seeker in his younger years but later on became a firm believer in taking low risks that could generate reasonable rewards. Black spent most of his life working out CAPM's implications for the economy as a whole, advocating for a society that tries to optimize the risk-reward trade-off. He believed that government interference would only disrupt the market's equilibrium and create profit opportunities for certain players. Despite his unorthodox approach, Black's ideas made a considerable impact on the field of finance, paving the way for modern risk management practices. The unconventional life of Fischer Black. Fischer Black's life was marked by an inability to fit in, as he moved between academia and practice, and struggled with personal relationships. Despite this, he made significant contributions to the fields of computer programming and financial economics. He was a brilliant thinker with unconventional views on money, but also had a reputation for telling clients the truth as he saw it rather than what they wanted to hear. Black's unorthodox life and career remind us that sometimes the most innovative ideas come from those who don't quite fit in. The groundbreaking option pricing model. Fischer Black's solution to valuing options. Fischer Black's contribution to economics, the option pricing model, remains an invention that revolutionized the world of finance. In 1968, Black met Myron Scholes, and they collaborated on a project to develop new investing strategies for Wells Fargo. Their idea for the Stagecoach Fund, based on the concept of CAPM, was a practical application that became the inspiration for today's S&P 500 fund pioneered by the Vanguard Group. In 1969, Fischer began considering the problem of valuing options, and conventional economists thought that following the present value of an option was the only approach. However, calculating the present value depended on future uncertainty that was almost impossible to solve. Black realized that the present value of the option depends only on the stock price and time, and he filed his notes away until he met with Scholes and showed him his revelation. Using CAPM logic, Scholes envisioned setting up a hedged investment position in which one buys the option and sells the stock short, therefore limiting the risk involved. Together Black and Scholes solved the problem of valuing options without relying on any information about future expected stock values. They introduced their model publicly in 1970, and it proved indispensable in managing economic risks in the coming years.
In summary, Perry G. Mehrling's book offers a captivating insight into the life, philosophies, and innovative ideas of Fischer Black. As one of the pioneers of financial economics, Black's contributions included the development and expansion of the capital asset pricing model, CAPM, which transformed the way investors approached risk and reward in the market. Despite not fitting in with traditional economic circles, his work laid the foundation for tools like the Black-Scholes option pricing model, which became instrumental in managing financial risk and uncertainty. This book serves as a vivid reminder of the enduring impact of Black's revolutionary ideas on the world of finance and economics.